Hello, my name is Mark Alpert, and I'm a financial counselor and a certified financial planner at the New York Legal Assistance Group. NILAG financial counselors are available to provide free one-on-one confidential financial counseling to help you through this difficult period of financial uncertainty. Please contact the social worker or organizer who introduced you to this presentation if you would like to be contacted by a financial counselor. Today's presentation is about student loan debt relief under the CARES Act related to the COVID-19 crisis. If your income has been negatively affected by COVID-19, you are not alone. And this series of webinars is designed to help provide some guidance on managing the financial impact of the crisis on you and your family. New York Legal Assistance Group is a leading nonprofit civil legal services organization. Also provides financial counseling and advocacy. But a couple of disclaimers. First, although NILAG provides legal services, this is a financial presentation. This is a financial presentation and is not intended for either official legal or tax advice. Second, things can change very fast as the federal, state, and local governments pass laws and executive orders that may result in new programs or affect those discussed in this presentation as of April 7th, 2020. In fact, as we'll see on the last slide, Governor Cuomo recently announced a new initiative with student loan servicers in New York State, although very few details have been announced so far. Here is an agenda of some of the topics that I will touch on, and I expect this presentation to last about 15 minutes. The CARES Act, or better known as the Coronavirus Relief Act, does provide some financial relief for student loan borrowers, but with important caveats. First, it only applies to certain loans issued under federal loan programs, such as the Direct Education Lending Program, some of the older federal family education loans, and Perkin loans. But even if it is a federal loan, the loan must be owned by the Department of Ed. It does not include any loans made through state programs or private lenders. So it's important to understand the type of loan you have and who owns it. Therefore, the first step is to make a list of all your student loans on a piece of paper or spreadsheet, regardless of type. If your loan is a federal student loan, it can be identified at the National Student Loan Data System. You will need to create an account if you don't have one. You can create an account at www.studentaid.ed.gov, or you can call the number shown on this slide. Once you create the account, you can then find all the details of your federal student loans and find out if it is owned by the Department of Education and therefore qualifies under the CARE Act. Now, private student loans are not in this or any other national database, so you need to refer to your own documents. However, most private student loans and most federal student loans, but right now we're focusing on private student loans, will show up on your credit report. The best source to pull your credit report is at www.annualcreditreport.com. When you go to this website, you will see that it is the only credit reporting site authorized under federal law. You can obtain your credit report from each of the three major bureaus, Equifax, Experian, and TransUnion. But I suggest pulling only one report, as the reports are free once every 12 months from each agency. You can always call your loan servicer, which is the place where you send your monthly checks, to find out also who owns your loan. So let's see how federal loans are reported by the Department of Ed and the credit and also the credit agencies. Let's start with the Federal Student Loan Database. Once you've created your account and you get into the database, you will see a page similar to this summarizing all of your loans. You need to click on each individual loan to find all the details. So we clicked one loan, and when you go into it, you're going to see that it will give you a lot of information: when the loan was made, when it was dispersed, what school you attended to, your payment history. But also down below, it'll show you who owns the loan, known as the lender, and who you should call if you have questions, known as the servicer. Right now, we're trying to see if the Department of Ed owns our loan. And indeed, in this example, we see that this particular loan is owned by the Department of Ed. Great. So it's covered under the CARE Act. But now we went to another loan in the database system. But this loan, as you can see under the current lender, it says Deutsche Bank, followed by some other names, suggesting that it's either owned by Deutsche Bank or some investment vehicle set up by Deutsche Bank. It's not owned by the Department of Ed, apparently. So this loan is not covered by the CARE Act, even though it's a federal student loan and is found in the government database. Now let's turn to a credit report example. In this case, an Equifax report. Credit reports should list and could list both federal and private student loans, provided that the lender is reporting to the credit agency. So it's not always a complete list. But nonetheless, in this example, we are seeing two different types of loans. The top loan reports one as Department of Ed /Nelnet. So most likely, this is a loan owned by the Department of Ed, but serviced by a company called Nelnet. You should probably call Nelnet to verify. But the second loan is reported just as Navient. It doesn't say Department of Ed. So most likely, this is a private student loan that was made and serviced by Navient. Navient does both federal and private loans. So it does not appear to be covered by the CARES Act because it may not be owned by the Department of Ed. Again, you probably should call and verify. Oftentimes on credit reports, they will give you the phone number to call. Now, just a quick side note. If you hold an older FFEL loan that isn't owned by the Department of Ed, you might be able to turn it into a qualifying direct education loan for CARES Act purposes. This is known as consolidation, but this isn't always a good idea. It partly depends upon the interest rate you're paying on the older loans and what the new rate will be. But a major consideration is if you're in the Public Service Loan Forgiveness Program. If you consolidate a loan that is in the Public Service Loan Forgiveness Program, all the qualifying payments you made in the past may be disqualified and you may have to start over again. So make sure you speak to your servicer and carefully consider the ramifications of consolidation just for the short-term relief of the CARES Act. All right, so what is the CARES Act? If you have qualifying loan, here is the relief you can expect under the CARES Act. First, your payments will automatically be suspended through September 30th, 2020. You can still make payments if you wish, and all the payment will go down to pay down the principal of your loan because of the interest. There's no interest rate right now. You don't need to do anything, but if you call your servicer to inquire about the CARES Act program and administrative forbearance, just be clear that you are inquiring about the CARES Act program. Your servicer may be offering its own forbearance plan that is not as attractive as the CARES Act plan, and you want to avoid confusion. In addition to suspension of required payments, the CARE Act will reset the interest rate to 0% through September 30th, 2020. So the interest won't accrue and your balance won't grow. Note that the interest rate reset even covers loans that are in default, again with the caveat provided that the loan is owned by the Department of Ed. So just to reiterate, if your loan is owned by the Department of Ed, everything should be automatic. The interest rate will be set to zero, your payments will be suspended, and interest won't accrue. You can make payments if you wish, and that's really a good thing because the entire amount will go to pay down principal and reduce the amount that you owe faster. Many of you may be on an automatic payment plan where the monthly payment is taken directly out of your bank account. These debits will stop for the CARE Act period. So if you wish to keep making payments to pay down your loan, you need to opt out and you need to call your servicer. Let's turn to a few specific situations. I briefly mentioned the Public Service Loan Forgiveness Program. Generally, only those months in which you make a full payment count towards your goal of 120 total payments required for forgiveness under the program. But this requirement has been suspended, so if your payment required is zero for the suspension payment, it will still count towards the 120 total. However, and this is a big however, the Act seems to still require that you work full-time for a qualified employer. So if you were laid off or reduced to part-time work at a qualified employer, it would appear that you will no longer qualify, your payments will no longer qualify under the CARES Act towards that 120 requirement. We hope to get some clarification of this in the near future. What about if you're in default on your student loans? Well, there's help here too. Even defaulted loans, if owned by the Department of Ed, will benefit from the CARES Act relief. This includes loans that are currently under a rehabilitation plan. Moreover, the Department of Ed has suspended administrative withholding of tax refunds as well as wage and Social Security garnishment for defaulted loans. There's a phone number here if you have questions about your program, about the rehab plans or garnishments. And missed payments will not be reported by the Department of Ed as delinquencies. They will continue to be reported in good standing to the credit agencies. But this relief is temporary, and assuming you do not get your loans out of default by September 30th, 2020, all the nasty things we just mentioned become effective again. All right, I'm almost finished, but a couple more words. If your loan isn't held by the Department of Ed, but it's a private student loan, what happens? Well, private student loans are not covered under the CARE Act. We have been reading newspaper articles that some lenders are offering their own versions of help, but it's really up to them. All you can do is call and ask for a hardship program because you were affected by the COVID-19 crisis. But when you talk to the servicer, please make sure you understand how their plan affects your loan and future payments. You don't want to find out, for example, that at 60 or 90 days in the future, all of a sudden you owe a big payment for the deferred payments of the past. Lastly, if you have good credit, you might consider refinancing your private student loan given that interest rates in today's environment are so low. As I mentioned at the beginning, Governor Cuomo yesterday just announced additional help, and there's very little information on this. All of my remarks so far have related to the CARE Act as it applies to federal student loans. But as I said, the rules and regulations are in flux and subject to rapid change. Governor Cuomo released a statement that seems to cover a broad sector of student loans. He announced on April 7th an agreement with the largest student loan servicers in New York to provide hardship relief to any student loan borrower in New York. But so far, it's just an announcement and no details have been posted. We don't know which loans, which servicers, or the nature of the relief. please refer to the New York State Department of Financial Services for more information. Lastly, here we have some reference sources for you. And once again, also remember that NILAG financial counselors are available for free confidential phone consultations. Please contact your social worker or service provider for a referral. Thank you.